Welcome back. Well, we're getting into pre-open, but for the time being, let's get in some derivative strategies. Manoj Muralidharan, VP Derivatives at Religare Broking, joins us on the show. Hi, Manoj. Morning. It's going to be an interesting day, right? Good series is what we've seen, but volatility will pick up because it's expiry day. How are you approaching trade?
Good morning, Nigel. Yes, it has been a good series, at least on the April side, thanks to the bank Nifty and the banking stocks. But Nigel, I guess 17,800 is a strike where there is good amount of call and put option open interest, and we believe that the swing can be from this pivot of a good 80 odd points. So 17,880 and 17,720 might be the intraday range, and we're expecting the expiry might be in the vicinity of 17,800 plus or minus 20-30 points. But stock-specific movement is still there, and we're expecting that again we might see some traction from the banking stock as well. But there are a couple of sectors where there is good buying happening, especially the oil and gas. So we believe stocks like ONGC, which has seen good delivery-based buying at 155, 158 levels, and currently at 160 also, with a follow-up buying in the stock future, it becomes a buy for May series. So let's say 158 to 160, you can buy that. The stop loss should be 152. And we are expecting closer to 168 to 170 as a target. Now, having mentioned the bank Nifty, we believe that the PSU pack, especially stocks like SBI, has been showing good buying. But we would say that try and use a May option 570 strike call option for SBI. I guess you can buy it closer to around 10 to 12 rupees. The stop loss should be closer to 7 rupees and that, and we're expecting target close to 16 to 18 on that.
Okay, fair enough. Thanks very much, and good getting those from you. Deepan is still with us. We're about a minute away from the pre-open session. Deepan, you know, this the Gujarat rally yesterday, GSFC, GNFC, Gujarat Alkali, GMDC, GSPL, 10 to 20% across the board. Anything you like here? Anything you own here? What's your view?
No, Prashant, I think I missed all of them. This typical bias which is there towards PSU stock that came into play. But I think GSFC is really interesting. It's a low-cost producer for many of its products, and it's got a lot of minority stakes in many other companies which can be unlocked. So that, I think amongst the entire Gujarat PSU, that would be our top pick.
Mahindra CIE was another big mover yesterday, some 8-9%. I think we've spoken about this in the past. Anything fresh here?
No, Prashant, I don't think so. But the fact that the auto industry in India is doing well and Mahindra CIE has been gradually focusing more and more on auto industry, I think they have divested of some of their businesses in Europe, which was slow growth. I think since then we have seen a higher growth rates quarterly basis for Mahindra CIE. So this is the reason I think we are seeing fresh interest in it. And auto per se, I think, is a preferred sector, and eventually the rally in auto will get translated into better returns coming in from the auto ancillary, and not just Mahindra CIE, but other auto companies. I think could deliver interesting results like Bosch, Uno Minda, Minda Corp. I think they're all India-focused companies, and they could deliver good results as well.
All right. Deepan, what about Raymond? And I'm not sure your view on the stock. Promoter entity at times has been questioned. You know, there's a press conference later today. The street is speculating about a lot of permutations and combinations. Whatever it is, it better be good because the stock is up 35-40% in the last 1 month. What's your take on the company?
See, I think it's a value play because they have the land in Raymond that could be spun off, and these days real estate companies and real estate values have gone up significantly, and Raymond could be a very big beneficiary of that. Last estimates show that the value is rising over there. Then they have the small FMCG business where there is some talk that may be divested off completely, and that value unlocking can take place over there. And overall retail business, they are focusing on the wedding collection. They're trying to take on the likes of Manyavar, which is good. I think they've been a little late in the game over there, but there's a huge opportunity over there as well. So if you add up all the sum of the parts, then the value is significantly higher than its present market cap. And I think a lot of investors, especially influential ones, have got into Raymond Limited. I know that there are corporate governance issues, but this is a company which has a very, very long history of listing as well. And, I think some of these issues will get eventually ironed out. So you could expect higher earnings multiple for Raymond as well.
Okay, let's see what that announcement is going to be all about. So plenty of action on that corporate front after market closes today. The other space that's been catching the headlines is the oil complex, because we saw that big decline, almost 3.5-4% decline overnight. Prices have, of course, rebounded this morning. So what's going on? Let's go across to Vandana Hari of Vanda Insights for some perspective. Vandana, thank you for joining in. Good morning to you. So it was a little perplexing because the US data that came out yesterday, the EIA data, that showed a big drawdown in inventories. Inventories fell a lot more than anticipated. And yet the market was declining on some other worries. I don't know if it was recession or banks or what it was. But what's your sense of the oil market right now and the volatility that we saw overnight?
Good morning. Excellent question, especially with regard to the quite a bullish EIA inventory data and even US demand data. So just to put everything in context, I would say here's the main thing to bear in mind when looking at the oil markets for the short term. So you have the financial market sentiment, and then you have oil supply-demand fundamentals, right? Right now, oil prices are being driven entirely by the former. So everything that is either improving or worsening risk appetite in the financial markets is exactly what is moving crude up and down. And what we have seen this week is essentially reminiscent of last month's the banking crisis in the US. So only the actors have changed. So now all the attention is on this First Republic Bank, and that is in turn that has been triggering fears of could this be a wider contagion? Could this mean that US recession is around the corner? And as a result, crude is being sold off. It's almost entirely decoupled from fundamentals. By and large, global fundamentals, we could talk about EIA and US separately, but by and large, on global fundamentals are quite balanced. That's another reason fundamentals have taken a backseat, not just now, but pretty much since the start of the year.
Okay, so given that the market's moving on sentiment, hard to put a band on sentiment, but if I were still to sort of ask you to try and do that, what's the immediate range that you see ahead? Because these things will continue. I mean, what's happening with banks, we don't know. But if let's look at Fed, and the anticipation is 25 basis points and then they're done. Looking at macros and slightly deeper fundamentals, what's a band that you expect oil to be in?
Yeah, so we should definitely talk a little bit about that. Just going back very quickly to the EIA US data. So indeed, it was quite bullish. A drawdown of inventories across the crude and products in the US. Even demand, surprisingly, is picking up. So gasoline demand is running almost 4 to 5% above a year ago. Same for distillates as well, which is a bit surprising given that broadly the distillate demand trend in the US is a downward slope. But again, as I said, what's happening is in the financial markets, you have a couple of factors that remain in place. So one is, of course, the banking crisis, and what more, the fears of what more the fault lines are there yet to be discovered. And then we have the Fed meeting coming up next week, and speculation over whether the Fed will continue on its monetary tightening path has also kept the markets on the toes. So next week's Fed meeting is expected to produce a 25 basis point hike, which is like mostly baked into the market. But right now, the bigger worry is what does the Fed do after that? And then we have the ECB meeting in Europe next week as well, which is also expected to yield another rate hike. So overall, when oil market players are contemplating the environment in the financial markets, it's not looking very good. In terms of the central banks continuing to tighten monetary policy, inflation remaining stubborn, and basically consumers are just losing the confidence to spend. And we are seeing not much support for oil from China as well. So we had quite a mixed set of data for Q1 and March from China, both in terms of macroeconomic data as well as oil demand data. So it's painting a picture of slow, uneven recovery in China. So, a lot of the bullish sentiment that had developed in the oil markets because of the China reopening, that has subsided as well. So that support is gone, just leaving crude prices vulnerable to being battered by a drop in risk appetite.
So Vandana, can you leave us with a range, some sort of an estimated band?
So just looking out at this year, I maintain my sort of expectations of prices somewhere ranging around, mid 70s to $80 a barrel. That would be a good $20 to $25 below the average that we saw for last year. Now, again, last year was a very supply fear driven environment. This year is entirely about demand.
All right. Thanks very much, Vandana. Appreciate you joining in, and good getting that perspective from you on oil, single most important commodity from an India perspective. Well, let's get the 9-10 calls out of the way. Sudarshan and Mitesh are back with us. Sudarshan, what do you have?
Well, Chambal Fertilizers is a buy with a stop under 273.
Okay. And Mitesh?
I'll go with the buy on Bazaar Paints, around 600, buy with a stop at 590 for targets of 625.
By the way, Mitesh, anything from that Gujarat pack stands out with the huge moves that we saw yesterday, purely on the back of volumes and price action?
Disclaimer, we have positions in GNFC on the future side. Yesterday, there was some kind of a breakout gap, looking at a target of roughly around 640 there. But that apart, I think Deepan mentioned GSFC. I think a very strong and a powerful breakout seems to have taken place over there. While there is some supply around these levels of 163, 165, I think it will clear the swing highs of 180 easily. So I think there's easily about 20% left as an upside in GSFC. The entire package is good, but I have focused on GNFC and GSFC.
Okay. GSFC, GNFC, both looking good. Mitesh saying that they already have positions in GNFC, so just a disclaimer. And Mitesh, this entire, companies like RVNL, etc., what is the price action telling you? We saw big movements around. 9% up, some 13, 14% lower, then finally, very inconclusive kind of close.
In the last 4 or 5 days, I think all these stocks have rallied a bit. So I think yesterday's price action was nothing but more of a profit booking. It will give a pullback to its 10-day average, 20-day averages, etc., and maybe consolidate. But the long-term charts are very, very positive over here. Disclaimer: we have Ircon as part of our long-term holding portfolio. So I think that still looks good to me. I would look at least 20% upside from here in the next 2-3 months on most of these stocks. And while there could be a 5-8% kind of a trading downside, I would be a buyer on those stocks.
All right. Thanks a lot for that, Mitesh. Well, let's get in our researchers to recap some of the top stocks we're looking at. Abhishek's with us to tell us about Bajaj Finance. Abhishek.
Well, brokerages have written on Bajaj Finance. There is a mixed view coming in from brokerages. I have 4 brokerages, 2 of which are bullish and 2 of which are bearish. So the bullish brokerages do say that they think Bajaj Finance can continue to deliver 25% plus in terms of growth and versus the banking system, which is at low to mid-teens in FY24. And beyond that, the company has actually surprised on positive side with respect to net interest margin. On the flip side, analysts say that peak performance has been achieved. You can brace for some moderation in the numbers. However, repeat customer purchase ratio is also remaining relatively on the lower side. Rates have likely peaked out, which should be a tailwind for Bajaj Finance. And ROE profile, one of the key arguments from the bullish brokerages is that is a key value creation metric which is at record high, and they see levers in terms of improvement in ROE profile for Bajaj Finance. So we have Morgan Stanley and JP Morgan who have an overweight rating on the stock, target price of 8,000 and 9,000 respectively, while Macquarie has an underperformance rating with a target price of 5,200 and Goldman Sachs a sell rating with a target price of 6,040 per share. Back to you.
Okay, got that, Abhishek. Thanks very much. So Bajaj Finance definitely a big stock in focus. Rima is back with a recap of some of the key IT earnings and the factors to watch today on the sector. Rima?
Thanks so much for that. Well, for starters, there could be a rub-off impact because Nasdaq outperformed yesterday and closed with a gain of 0.5%. And the big tech earnings, whether it's Alphabet, Microsoft, or even Meta overnight, was not as bad as what the markets were fearing. In fact, that's been the picture in India as well. Yes, we had an Infosys shocker. TCS was not a great set of numbers, but what followed thereafter was not as bad as what that panic reaction, the panic fear that we had post-Infi. So look at Coforge's numbers. Revenue growth on the top line, 5% on a sequential basis. FY24 guidance at 13 to 16%. L&D Technology, again, top line growth at 2.9% is better than what the street was anticipating at 2.7% growth. And next year's guidance of 20% revenue growth, which includes an organic component of 10%, was also pretty resilient. That said, Both L&T Tech and Coforge missed the mark on the margin performance. Today, when we get numbers from Tech Mahindra, Wipro, LTI Mindtree and Mphasis, we will have a complete roundup of the Indian tech sector's Q4 performance. So the picture will be crystal clear by the end of tonight. But so far, I think the reading is not as bad as what the initial reaction was post-Infi's numbers. Back to you.
Okay, well, we've got 2 minutes to go for the market opening. Rima, thanks very much for that. Mitesh, of course, is still with us. Mitesh, any thoughts on stock like Nestle or Crompton, Tata Consumer? Small but solid gains yesterday.
Well, I think I like both of them. Nestle is just on the verge of, in fact, has just broken into all-time highs. And we had some buy calls last week. I think even this week it's showing continuation of the momentum, looking at targets of 22,500 plus over here. And Tata Consumers was a buy, I think, a couple of days back when that big breakout happened. I think the 200 average is about 765, which is my first target. But the strength of the breakout tells me that the stock should clear that eventually and head towards 800 plus levels.
Two more names. One is Ipca, which sold off day before, was sharply lower yesterday. How is that looking? And the next one is MCX, which ended down 7%.
So I have today a sell call on MCX, looking at a first target of around 1350, but I think eventually 1300 is what I think the stock will head towards. And Ipca, big breakout, that's kind of changed the long-term trend as well on the negative side. I think the stock will make lower highs and lower lows. It could give a pullback after 3 days of big declines, but I think around 720, 725, this can be sold. And I think eventually looking at a target, which should be lower than about 600 rupees.
Okay, we're all set for the open, and it looks like SBI Life could be a stock to really watch out for, considering they're sounding a little more optimistic on FY24 than their peer HDFC Life. In the pre-open, that's a stock that's in pole position, and here goes the bell. So as we start things off, we've got some green on the screen, about 12 points higher is how things are opening up on the Nifty. Bank Nifty started slightly subdued, about 9 to 10 points lower, but SBI Life, that's the big stock that's up and about. So is Bajaj Finance. So we're getting some good result reactions to kick things off this Thursday morning. Even Bajaj Finserv, for that matter, is up about 0.7%. Bajaj Auto is seeing a little bit of follow through, not much, actually it's less than 0.5%. Reliance is keeping the index above, I was about to say above water, but now the Nifty's turned negative, despite the push coming in from both Lever and Reliance on the upside. So what's the problem? On the downside, you've got some of the banks which are very lackluster as the day starts off. SBI, ICICI Bank, these are the biggies on the lower side. ITC is exerting some downside pressure. HDFC Life, very interesting divergent trade playing out between SBI Life on one hand on the way up and HDFC Life, because the commentary for the year ahead, that's FY24, seems to be a little different from both the companies. SBI obviously sounding a little more bullish. ONGC losing some ground with the overnight slump in oil prices, about 1% lower over there. Some of the metal stocks, Hindalco, JSW Steel, Tata Steel, so the entire metals complex is starting the day on the negative side. Those are the initial trends that we have. Flat on the Nifty, about 5 to 6 points on the lower side. But Bajaj Finance is now seeing some traction, 1.5% up. Nestle continues to see some ground. Infosys is on the upside. So as things start off, Nigel, on the Nifty at least, the biggies are really netting each other off. It's even Steven between the bulls and the bears.
Well, that's right. Let's focus on a few stocks on the broader market. City Union Bank, Mr. Kamakodi, he has been appointed as MD and CEO. He's got an extension of around 3 years. We had highlighted this a couple of days back that the delivery data in the last few days has been indicating that the street is expecting something. He's got the go-ahead, and that's why that stock is one of the big gainers, up close to around 7%. Ekta told us Syngene's numbers were very good. That stock is up close to around 4.5%. LTTS, well, we just had the management who joined us. They're guiding for a good top-line growth of close to around 20%. Yes, margins as well as receivables will get a little bit stretched owing to the SWC acquisition, but that stock has opened up in the green. Indus Stars, that's up close to around 2.5%. Rima told us that those numbers look very, very strong, so that's the reason that one's flying away. But pull up Coforge, let's see how that one's reacting. There was a bit of a margin disappointment, I think, out there, but I think the guidance was strong, so that's why that stock as well is higher with the gain of close to around 1% or thereabouts. Voltas, numbers didn't look good at all. There was margin compression out there. It was lower than what we were working with as well, and the street doesn't like that because that stock, in fact, is under some pressure, down close to around 2.5%. Yet GMDC that had a big run yesterday, well, that's coming for some profit taking, down close to around 3.5% in trade today. And keep an eye out on Raymond as well as Godrej Consumer. Apparently, there is Both of them are having press conferences today. So let's see what comes out of that. For starters, though, Raymond has opened a little bit higher, as we've been highlighting. For the last 1 month or so, the stock is higher, while Godrej Consumer a little bit subdued, down close to around 1.5%. Prashant.
Just before we hand it to Prashant, Nigel wanted to also mention the guys who make medical devices. Because remember, there's a new policy that's out. It was announced yesterday at the end of Cabinet. So Polymedicure is a little excited, 2% up. Look at something like Tarson's products, Mopin Laboratories. These are stocks that are up about 1.5%. Indus Towers is now really catching on momentum. Margins have gone back above 50% after 3 weak quarters. And that's having a good rub-off effect on the stock. So just adding some of those names on the list. The Gujarat guys, well, they're all cooling off after yesterday's mega moves that we saw. Back checking the large caps, the Nifty is absolutely flat. So is the Bank Nifty, actually, not giving you any clear sense of direction. Again, just to recap the biggies, you have an Infosys and a Reliance really holding things up at the upper end of the screen. There's an IndusInd Bank that's a little positive. Bajaj Finance continues to find traction post the earnings. But then on the downside, you've got a SBI, you've got an L&T. So these are some of the stocks, ICICI Bank. So these are the stocks that are making sure that the bulls don't run away immediately.
What about tech, KPIT? The stock is up close to 3% odd. We'll have the management joining us in just a bit. Yesterday, the stock was up more than 5%. The street likes the guidance that it's put on the table. And now it's up close to 3.5%. I recall, Prashant, a few days ago when we were highlighting a JPM note, they were a little bit cautious on the stock. And on that day, it fell 15%. I recall we were on closing bell. But it seems to have recovered most of those losses. So we'll wait by for the management's guidance. But for the time being, the street is saying they like what they have seen in terms of the numbers, as well as in terms of the guidance that they've given.
I think since then, they also reversed their call. I think they're overweight now, from what I remember. But we'll check on that. 944 on KPIT. Stocks up about 4.25% after yesterday's 5% move, by the way. Numbers came during market hours yesterday. Well, on the Nifty, we've got, I think it's quiet, like the openings over the last few trading sessions. The Nifty is, 4 points, neither here nor there. Mahesh Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. He's a market master of the day. Mahesh, good to have you with us here on the program. Thank you very much for your time. And let's just start with IT there, with the mid-cap IT companies all still reporting good numbers and sounding confident about the future as well, the next few quarters. LTTS, for example, this morning saying, well, if there is a sharp slowdown, maybe we'll see a slowdown in that particular quarter. But otherwise, the drivers are pretty solid to continue to drive good growth. And that's a space which the institutional sort of investors were largely underweight on. How is the view changing, if at all, Mahesh, at least at Birla?
Yeah, good morning. So in IT sector, we have been a bit cautious running into the quarter because this is a quarter where one would have got a good guidance in terms of how the growth outlook will pan out in the concern that we are seeing a slowdown in the US, and especially in the discretionary spends have seen an impact over there. But as we look at the numbers, while there has been some downgrades from the large names, but by and large, we think that this is a transitory phase, right, for next 1 year. And I think overall, over the next 2 to 3 years, if we take a slightly longer term view, then we think structurally, I think the spends which are there on the digital side, I think will continue. And the industry will still probably grow at around close to, not probably high teens, but in low teens thereafter. So, and there have been some margin pressures, okay, which we've seen in some of the IT names. So, but there again, I think our view is that the pressure which is there on the manpower side and the wage cost inflation, that is kind of moderating down. So margin should also be within a particular band. So overall, we see growth slowing down a bit, but except for this fiscal year, post that, we would expect growth to be somewhere around, low teens. And it could be a relatively good sector to look at, though not very exciting in terms of the growth, what was there in the last 2-3 years, but a kind of a moderate growth, stable margins, good cash flows, good dividend yield. So we're kind of neutralish on this sector at this point in time.
Got that. By the way, should keep an eye out on Bajaj Finance. It is the Nifty winner, and now it's adding on a little more momentum, 6,200 on the stock with a gain of about 2.5%. Mahesh, morning. So let me actually ask you about the lending business. And what you're more convinced on. I mean, across the board, I think all the top tier companies, whether it's banks or NBFCs, we've seen very strong credit offtake, loan growth basically. We saw that with ICICI Bank, we saw that with Bajaj Finance. The only question is whether the market is willing to be a little charitable in case margins fall, which is something that Bajaj Finance kind of hinted at. Today, the market's lapping it up, doesn't seem to have a problem. But what is your house call on lenders, both the bank and non-bank, and which category would you prefer?
Yeah, so on the banks, I think the numbers have been fairly strong. They have been benefited because of the increase in the repo rate, and that has reflected in the terms of the margin expansion, what we've seen. I think our view is that the whole rate increase cycle is now behind us. RBI has paused, and we don't expect any further rate hikes from here on. Though we would still expect that the rates will not also come down too soon. We expect them to remain at least until this fiscal year. So in this backdrop, from the banks, you could see some kind of a margin contraction as we move forward in the second half of this fiscal year. But again, the overall net interest margin should still be higher than what they were a year back. So we don't see that as a challenge, and market is already factoring in that. And on credit growth, though we think that last year was a fantastic year in terms of credit growth, around 15% kind of a growth for the overall industry. That will moderate down because we're seeing the overall WPI inflation coming out dramatically in this fiscal year. So while the real-term GDP will grow, but nominal GDP growth will be much lower. But still, it should be around 11% or so. So banks, I think, will continue to be steady. NBFCs is where I think because of the now pause in the rate increase, I think the hit on the NIMs, I think that will now be behind us. So we don't see, in fact, the impact on the net interest margins for the NBFCs. I think you'll see that turn around from this quarter, next quarter onwards. And that should be positive for a lot of the wholesale lenders because market was initially factoring in one more rate hike. So I think incrementally, I think some of the NBFCs would probably do better in terms of growth or profit growth compared to the banks in this fiscal year. So there could be some shift from banks to the NBFCs, especially the better quality NBFCs, which have got a good pricing power. And we expect overall the NPA cycle to remain fairly benign. We are not seeing any stress at all.
Hi, Mahesh. Morning. I wanted to ask you about the pharma pack. In the last 1.5 months or so, actually, that's been a relative outperformer after doing absolutely nothing in the last 5 years. Maybe it's the rub-off of a new IPO coming in from that space, Mankind Pharma. The response has been fairly mixed, I think so. But what's your view on the pharma space? You're cautious on IT. The other defensive we normally look at is pharma. Has its time come, or still there are challenges?
Yes, so the pharma sector, I think if you look at the real pain point has been on the US market, especially the US generic space, which did well during the COVID period. But in the last 1 year, we have seen, again, the impact of price erosion impacting the sales growth over there. And obviously, there were issues about plant issues from as Fed inspection has again restarted. But I think at the margin, I think the sector looks fairly attractive in terms of valuations. I think valuations are at long-term averages. The reason to be slightly more positive in the sector right now would be that the US generic space is seeing some kind of a bottoming out in terms of the pricing pressure. There has been some kind of a shortage we have seen that has led to some increase in a few of the generic prices. But I think over a medium term, we are seeing some consolidation now starting to happen in terms of on the supply side. There have been some M&A activities, and that could mean that the pricing intensity will come down, and that should be good. That's what the market probably is looking at. And the domestic sector has been fairly steady. I think last year was a not so great year because the COVID base was high. Now that base is getting normalized. So you will see the domestic growth also probably in line with the long-term average growth, which is around for the sector, which is around 10 to 12% in that rate. So by and large, I think overall the sector should do fairly steady in terms of earnings growth, and valuations after the underperformance are also reasonable. So we are very positive on the pharma sector, and you could see some sector rotation playing out over there.
No, got that. By the way, GNFC is down 1.33%. Let's pull these up. GMDC is down almost 4%. Gujarat Alkali is down 4%. So a lot of these names, GSFC is down 1.5% as well. At least for now, all of these stocks are lower. RVNL is the other one, star mover over this week, still up some 40%. It's down 2.5%. This is a small space for a very large fund like yours, But do you own any of these names, Mahesh? Any thoughts, or would you like to get exposure here? I'm talking about railways, sorry, the railway infrastructure names.
Yeah, so we don't have much exposure because there are very few names over there. And some of these companies, especially in the PSU side, while they have got some kind of a monopoly, but not a very strong competitive advantage really to look at. I think some of the kind of run-up what we've seen is not essentially on the domestic story, while in the budget we have seen railway has been a focus area, especially on the rolling stock side, not so much on the infrastructure side. But I think there are some export orders, which could open up opportunities, probably what's driving that. But again, this is a space, where we haven't had much of an exposure except for a few stocks. So, we don't. So some of these PSUs, we are not seeing them to be having a sustainable long-term advantage.
Got that. Mahesh, good talking to you as always. Thank you very much for stopping by today. We'll wind up on that note and look forward to our next conversation. Well, Maruti reported a strong set of numbers for the fourth quarter. The auto major reported a 19% revenue growth in Q4. Margins improved for the third consecutive quarter. It also announced capacity addition of 1 million units through its internal accruals, funded via internal accruals. Parikshit caught up with R.C. Bhargava, chairman at Maruti Suzuki, and began by asking him about the quarter gone by and how the company is looking at growth prospects ahead.
At this moment of time, things look much better. I think inflation is now under control, and the commodity situation is reasonable. It's not yet moving in any alarming direction. There is COVID, which is apparently making a comeback, but it seems to be now that the COVID is not as virulent as it used to be. It's more like people getting the flu. But there is still a threat of the monsoon not being good this year. That's one possible negative which is coming up. And of course, the possibility of surprises being thrown up by world events somewhere else.
Right. I would also like to ask you about the statement from the company that the board has approved an additional capacity of 1 million vehicles. Could you give us a sense, Mr. Bhargav, what is the total capacity of Maruti Suzuki as of now across plants, and how will this additional capacity come together?
Well, the board has approved up to 1 million, and the phasing is yet to be decided. But what we have today is between Manesar and Gurgaon, we have about 1.3 million. We have Suzuki's about 750 or 800,000 in Suzuki. We are adding another 100,000 in Manesar. We are implementing 1 million, up to 1 million, I should say, in Kharkhoda. And we have some capacity, about 100,000 or so from Toyota.
You've already said that the Toyota plant, for example, what you're manufacturing there in terms of your SUV lineup, that is working at full capacity. So the additional capacity of up to 1 million units that has been approved, will that be coming up as a new plant, or will the capacity ramp up happen at the existing plants that Maruti Suzuki has?
No, the 1 million is too big for ramping up in any place. It has to be a totally new site.
Okay. And are you close to zeroing in on any particular site in India? Will it be in Gujarat?
That's one of the tasks for the management, to find a place where they can, which will be the right place, let me put it this way, for the expansion to happen, taking into account all the requirements from the vendors, the exports, and other logistics and things, is one of the tasks they have to do, and that they have to find the land quickly also, because we don't want to spend too much time looking around for land and starting work.
By when do you expect a decision on the new plant, the location to be taken?
Depends on the site. I mean, we have to see where they find what they decide to be the right site. Because there are many considerations, techno-economic considerations that go into finding an appropriate site for putting up a plant of this size. 1 million is just about the largest size production which happens at any one site anywhere in the world.
You want to launch about 6 EVs till 2030. Would you like this new plant to cater to electric vehicle productions in a big way? Would you like it to be close to the battery manufacturing plants that Suzuki has set up?
These are questions which these experts who will select the site will have to deal with.
Okay. Mr. Bhargav,
that's their job. This is one of the issues that I'm sure they will consider.
Right. Mr. Bhargav, I'd also like to ask you about the production loss. You said that the production loss due to the chip shortage was around 170,000 units in FY23.
Yeah, correct.
How is the chip situation right now? What is the visibility like? Do you expect the production loss to continue in this quantum in FY24?
No, we think FY24 will be better than FY23. The improvement has not yet started to happen. But we expect these improvements to happen after July.
What is the kind of booking backlog you're carrying right now? Do you expect wait times to reduce?
The backlog, as of this morning, I'm told, is about 412,000 vehicles. And part of this is because of, or a large part of this is actually because of some electronic component or the other. The semiconductor issue is the major cause of the problem. Part of it is because also that, but that's not the biggest part of it, but there is a part of it, which is because the demand for this Ertiga and XL6 has far outstripped what was planned to be the production capacity which was installed.
Do you expect further decline in sales for the entry-level cars for the commuter?
The estimates for the current year are that it will remain flat. No decline, but no increase either.
Does that prompt you to work towards SUVs in a greater way? Would it be fair to say that greater investments will now happen on rolling out SUVs than entry-level commuter cars? Will Maruti no longer bring any new entry-level commuter car to the market?
No, we will keep changing the models and updating the models and all of that. That will continue. But because that we have to continue that, otherwise, it's a fairly large segment even now, even though there's no growth. The volumes in that segment are still pretty high. So we don't want to ignore that segment of the customer altogether by not giving them the benefits of change and new models and new technologies and things. So that will continue.
But the investments, the fresh investments, will only be towards SUVs in terms of developing new vehicles?
Not necessarily. The new models of the small cars will also be developed.
Right. Mr. Bhargav, I'd like to ask you...
Otherwise, how do you give change to people?
Right. Mr. Bhargav, what was the proportion of SUV sales in Maruti's total sales numbers in FY23, and how do you expect the proportion of SUV sales to go up in FY24?
The numbers in FY23, I don't remember, but the numbers will go up substantially in 24 because of the new models which have been added.
The first electric SUV that was showcased at the Auto Expo, is it going to be in FY24 itself, or will it be in the next fiscal?
FY25.
It will be
24-25, year 24-25.
The FAME scheme, the FAME 2 scheme, draws to a close in March 2024. As of now, the government is not looking at any proposal to extend the FAME scheme beyond that. A final decision, of course, will be taken later in the year. Is the industry mature enough to do without subsidies altogether?
You know, in China, when they withdrew the subsidies on electric cars, sales went down substantially. I'm not sure if in India because we haven't been availing of this, so I'm not having any first-hand information, but my feeling of the Indian market is that without subsidies, most manufacturers will find it hard to maintain their existing volumes.
Okay, all right. Well, time to slip into a short break. Up next, we'll be joined by Mr. Sachin Tikekar of KPIT Technologies. They'll be joining to talk about their Q4 numbers as well as the strong guidance that's been given. Later on, we'll connect with Mr. PJ Nath of Nelco to talk about their Q4 performance, which was absolutely stunning. You stay with us.